As money, as hard money. If you were talking in the crypto sense, it's the equivalent of the US dollar without the fiat crap, but it's where you'll park your store of value. I think that's very somber and bearish, but no, I mean, like, this thing does a drunk. It beats any other asset class by a long shot: stocks, real estate.
Welcome to Crypto Revolution. In this video, we take a look at the future of Bitcoin. Will this be the last cycle? What is the price prediction? What can new users keep in mind if they want to invest in the cryptocurrency? Leading Bitcoin Analyst Willy Woo, who is an industry pioneer of on-chain metrics and an expert at extracting investment signals and price forecasts based on blockchain data, addresses these questions. He shares that the bull market might continue into 2022. After looking at historical data, Wu observed that accumulation by long-term holders would take another month or two to reach its peak. This would likely play out positively on the price of Bitcoin in the upcoming months, and he predicts that the strong market can peter out from December onwards. He also predicts a less volatile mature market in the future, with Bitcoin finding its fair value. Don't miss out on what he had to say about his forecast for Bitcoin and its price prediction, and why this still beats any other asset out there. Watch till the end of the video to know what he had to say.
Probably within its last 100x, possibly last 10x, 10x to 100x. And we've had like something like tens of thousand X to get to this point. And so, like, I now think of Bitcoin as money, as hard money. If you were talking in the crypto sense, it's the equivalent of the US dollar without the fiat crap, but it's where you'll park your store of value. It's where you will, set and forget and go get on with your life. The last one ended at October last year. We had a decent spell of many months where we're at peak accumulation by these long-term holders, and then the price started to run up, and it started running up, and then those long-term holders started to divest and sell their coins out, and that actually has led, culminated with the price dropping down to our $30,000 range from the 60 to even 64,000. And then since then, the same pattern's happening, that they're accumulating, but we're not actually at peak accumulation. And it takes, you can gauge the time, you kind of gauge the time in which this happens. And I'm like, it looks like we've got another at least a month or two to get to fully accumulating. Based on historically, it takes this amount of time. And then after that, with high probability, you can say, once they're accumulated, then the price can run up because all the coins are taken off the market, and then it takes months for that to run up, right? And so, like, you work out the time frames. It's like, man, we're going to blow past this year, and we're going to keep running up, and like every bull market in the history of Bitcoin tends to peter out around the Christmas time of the year following the halvening, which we had. So the schedule really is for this bull market to peter out around December onwards. And currently the on-chain data is saying otherwise. And again, it's really difficult to mess with the fundamental data. A fair chance that we'll not go into what we think, which is a traditional, Bitcoin bear market, which generally is a huge retrace of maybe 80% of its value, and it also takes about 9 months to a year to shake out. I don't think that's going to happen, and I think now, judging from the maturity of this market and the impacts of the different parts of the demand and supply from different parts of the ecosystem, we're breaking out of this 4-year cycle, which was really contingent on, the network being programmed to have its kind of newly mined coins every 4 years. Like that drop in the new coins being dumped onto the market is now quite insignificant. And I think that taking that all into account and what I'm seeing on chain, I don't think we're going to have like what we see these normal 4-year cycles again. I think I'm calling this the last cycle, and people think that's very somber and bearish, but no, I mean, like, this thing does a drunk walk of ups and downs, trending upwards as it finds its adoption for indefinite amounts of time. These 4-year cycles are gone. That's what I think might be happening, which is, I think, is a big revelation, because that's against the expectation of what the majority think. So we'll see if that plays out. The on-chain data we have, it means that we're not going to have a market top, like a traditional cyclic market top, where everything goes into a mania phase and everything runs up, and then we have a blow off top and we come back down. We have this drunken walk. It's like the S&P 500. It just keeps wandering upwards. So it can be in the midline, and so the price could be anything between two models that I have, if they hold. Models are models, they sometimes break. So the upper bound is like 200,000 plus, right? And then there's the lower bound, which is, I think it's below the current price by significant amounts.
Wow.
But like the answer to this is that it means that let's not look at the upper bound anymore. Like, we're looking at the wrong thing. Everyone asked that question because at the end of this year is the expectation that's the top of this bull market and the end of this bullish cycle. If you remove the idea that if you look at the price chart over 12 years, we've had 3 prior cycles, and every one of those, it's done a huge run up, it's done a huge pullback, but retains most of its gain from the last cycle, and then it's done it again and again. The last one, we went from below 200, or like 150 was the bottom, and it went to $20,000, and then it pulled back from $20,000. Imagine investing $20,000 and then like you come back to at the end of the year and it's like $3,200. Like, that was the last cycle. That was the previous cycle, and the ones before that was more carnage. And we waited like a year for that to purge itself. And I'm just saying that kind of experience is likely to not happen again if what I'm seeing plays out in this network by the end of the decade. In 4 years, 1 billion people, So like, it's huge consequences. Like, this internet native currency that nation states don't like because they like to print their own money. It's like this new force that has risen, and it's a challenger to the monetary standard that we have currently. So like, the current trajectory is saying that there are huge ramifications geopolitically, and it's like 2% of the world is on this network. People will know it, they've heard of it, but maybe only 2.5% of the people. That's the best data we've got around that of the world have it. Doesn't look like much, but this is all exponential growth. So I think the Human Genome Project, I don't have the figures on hand, but it was like maybe 10 years to get to 1%. And the following few years, they finished the project because the technology and the growth of them sequencing the genome was going exponentially. So we're at 2.5% of the world population, and it's 12 years old. And that's not halfway. It's in the end game of Bitcoin's growth, because in 4 years, it's 1/8 of the world population. Really, the trap for new people. And actually, a lot of the token projects increase their supply design so that it's priced in pennies, so people think it's cheap, so you can buy. Don't fall for that trap. If you want to look at this logically and rationally, what you want to do is you want to risk reward, right? As an investor, you're looking at how much reward can I get at maximum for the minimum amount of risk. And so you can calculate that. It's called the Sharpe ratio, which is the ratio of the actual returns you can get divided by the risk being how volatile those returns are. And you can run that. And it just turns out Bitcoin over the long run, and I mean, you can't run this across 1 month, right? You got to run this over a long period to get a good thing on it. Bitcoin is the best. It beats Ethereum. It beats any other asset class by a long shot: stocks, real estate, emerging currencies. So what that means is, if you've got, say you're going to invest 5% of your net worth into Bitcoin. If you're going to do it in Dogecoin and you want to do a rational investment, you're not going to put 5% of your net worth in Dogecoin. You're going to put like a tiny little fraction, because the risk is so high, but the return's high as well. And so like it's kind of this thing where like you can get misled. You have to really calculate the risk out. Bitcoin's, I've never seen anything that beats Bitcoin over the long term in that lens as an investor. But if you're a trader, that's a different story. And I think that is what people end up doing. They want to trade, but that is another journey. And if you're going to take that journey, don't put too much in, because your goal to trade is to learn as much as you can for the amount of money you're going to lose, because you will lose it. You're trading against other people, and if you're new, they're going to have more information than you do.
Willy Woo foresees that Bitcoin may not replicate the same price action from the last 3 cycles, indicating that it will resemble a drunken walk without a large range rally and market fall. According to him, Bitcoin is on its way to 1 billion users by 2025, equivalent to the number of internet users in 2005, based on projected worldwide Bitcoin users expressed in internet years. One thing is clear: Willy Woo thinks Bitcoin is still the best asset out there and beats all its competitions. Let us know what you think about this interview in the comments below. We'd love to hear from you. We hope you found this insightful and helpful, and if you did, do consider giving this video a like and subscribe to the channel so we can always keep you updated on cryptocurrencies. Till the next video, this is Crypto Revolution.